Hello guys, welcome to the first episode of Crypto News, from Ramsers Academy. Before starting, please like, comment and share the video. Let's start. Ethereum co-founder Vitalik Buterin has spoken out in the wake of the FTX collapse, offering his thoughts and some positives from one of cryptocurrency's biggest black swan events. In a November 20th Bloomberg interview, Buterin said that the collapse of FTX contains lessons for the entire crypto ecosystem. He acknowledged that the underlying stability of distributed ledger and the technology powering the crypto asset economy has not come into question. The problem in this instance, and several before it, has been people, not technology. Buterin also labeled the FTX collapse as a huge tragedy, but added that it reaffirms the position of many in the Ethereum community concerning centralization. That said, many in the Ethereum community also see the situation as a validation of things they believed in all along. Centralized anything is by default suspect. He added that this ethos includes trusting an open and transparent code above humans. Over the weekend, Buterin posted a guide to having a safe sex with proof of insolvency. He said rather than relying solely on fiat methods such as government licenses, auditors, corporate governance and background investigations of people running exchanges, the exchanges could create cryptographic proofs that show that the funds they hold on chain are enough to cover their liabilities to their users. The problems for FTX are understood to have stemmed from the exchange's use of customer deposits for other purposes. After a large influx of withdrawal requests came to the exchange earlier this month, it found itself unable to meet withdrawal demand with its current liquidity. Vitalik Buterin is not the only industry leader recently speaking out about the FTX fallout. On November 17, Binance CEO Changpeng Zhao said that while regulation is necessary, it is more important for industry players to lead by example. During the Indonesia FinTech Summit 2022, Zhao said the entire FTX saga is likely to have set back the crypto industry by a few years, and will likely see regulators scrutinize the industry much harder, which is probably a good thing, to be honest. But actually, what happened to FTX, one of the biggest cryptocurrency exchanges in the world? The embroiled exchange filed for bankruptcy on November 11 after facing a liquidity crunch. In the bankruptcy proceedings of FTX, its sister firm Alameda Research and 130 affiliated companies filed for bankruptcy under the banner of FTX Group. The immediate relief of Chapter 11 is appropriate to provide the FTX Group the opportunity to assess its situation and develop a process to maximize recoveries for stakeholders, said John J. Ray III, the new FTX CEO. At the heart of the issue is FTX's native token, FTT, which was eviscerated in a huge sell-off. In a rapid series of events that unfolded largely on Twitter, FTX attempted to sell a large part of its operating business to rival Binance after a wave of withdrawals threatened to take FTX down. FTX was built on a house of cards not dissimilar to Terra USD. Like many other exchanges, FTX supported its own crypto token, FTT, designed to support its various projects. Owners of FTT could use the token to obtain discounts on trading FTX trading fees or for staking to earn income from their holdings. It's not an uncommon strategy. Binance, for example, offers two native tokens, Binance Coin, BNB, and Binance USD, BUSD. But how the token was used to support FTX left SBF's empire incredibly overexposed to volatility in FTT. Reportedly, as of June 30, the single biggest asset on Alameda's $14.6 billion balance sheet was unlocked FTT, while the third biggest asset on the books was a $2.16 billion pile of FTT collateral. This suggested that Alameda and FTX were anything but separate businesses, and it left Alameda wildly exposed to volatility in FTT. And that's the big downside to native tokens. These types of crypto coins are almost completely unregulated and can rapidly fall prey to market losses. That was all for this episode. Thank you for watching. Don't forget to like and share. See you soon.